sell side. We went through it. If it went through it and we didn't diverge, and if the NASDAQ made lower lows with the S&P, then I would not expect this. If the NASDAQ would have made a lower low like it did here in the S&P, I would not have gone long even if it went above that short-term high here, because then I would have expected this fair value gap to be something to be monitoring. But because we had that divergence with the NASDAQ lows not meeting the lower low that we see in the S&P here, then I want to watch and see, does it tip its hand to me and say, Michael, this is what I'm about to do. I'm going higher. Get on board. I'm going to give you a fair value gap. It runs above the short-term high here, there. This candle's high and this candle's low. That's what I'm framing here. That's the fair value gap. So the market dips back down into this area here on the news, comes back up, and the candle closes here. The next candle opens, trades one more time. This is the only other opportunity you have. But what is it really reaching for? Look at this wick from the low of the body, which is the closing price, to that low. Eyeball half of it, and it's also inside the fair value gap. Then it rips through this short-term high. This is a bullish breaker. What is that? The low here makes the high, and then a lower low. So this move up, you were focusing on the highest up close candle. Extend that range out. So as it's digging into this here, this is a return into that bullish breaker. Here's how you classify retail support resistance as the real levels to be trusting. If that high has a low prior to it and a lower low after it, after this high forms, then it comes back down to it, then yes, you can trust it as resistance broken turn support. The narrative behind why it should be that way is what makes my breaker the breaker. It broke anyone that was holding stops below here. It went lower than that and then ripped through this short-term high. This in itself is a shift in market structure. Same event is occurring with this short-term high here when that candle passes through it, is occurring with this high, with this movement right there. The logic is that we've done damage with this candle being a high here. It took out and broke. It broke the backs of anyone trying to go long on that low. When it ripped up higher like this, then it went down one more time to knock them out. There's liquidity taken here and absorbed. What kind? Sell side. Who would want to take out sell side? Individuals that want to go long. Smart money. Buying those sell stops up. They're being counterparty to it. And then using the fair value gap as it drops into here. And then one more time here. And it rips through the short-term high here. And it comes right back down into that high. But more specifically, it's a bullish breaker and old high, yes. And there's a fair value gap right there. You have three things qualifying that level.